Okay, let's dive right in. A pretty dramatic trade dispute has just blown up between the US and India, two of the world's biggest democracies. And right at the center of it all is one single number that's put a $100 billion relationship right on the edge. Let's break down exactly how we got here. It all comes down to this number, 50%. That's the staggering new U.S. tariff on a huge list of Indian goods. It's a move that practically overnight threw up a massive economic wall between these two partners. And look, this isn't some minor tweak in policy. We're talking about a sudden, really high barrier that has sent absolute shock waves through businesses on both sides. Everyone is just scrambling to figure out what to do next.
So you've got to ask the big questions, right? Why did this happen so suddenly? And what does this economic wall actually mean for the industries and for the people who are caught in the middle of it all? Let's unpack it.
All right, Section 1, the 50% tariff shock. And shock is definitely the right word here. This wasn't a slow burn. The whole thing went from just simmering tensions to a full-blown tariff war in only a few short months. So if you rewind to early 2025, you can see tensions were already on the rise. India had even planned its own retaliatory tariffs for April, but they hit pause, likely hoping that diplomacy could work things out. But that hope, it was pretty much shattered on August 27th. Washington didn't just raise the tariffs, they doubled them from 25% to 50%, a very clear signal that negotiations had failed and they were ready to play hardball. So why such a drastic move? Well, Washington is calling this maximal tariff penalties, which is really just a formal way of saying they're trying to apply as much economic pressure as humanly possible. The official reason they're giving is that this is a penalty for India continuing to import Russian crude, oil, and military gear. So that brings us to Section 2. Who gets hit hardest? Because a 50% tariff isn't just an abstract number on a piece of paper. It has very real consequences. So let's look at the actual economic impact and see which Indian industries are really on the front lines. To really understand the pain here, you have to start with this. The U.S. is India's single biggest customer, buying almost a fifth of all its exports. Now just try to imagine that. Your number one client all of a sudden makes your products 50% more expensive. The shock to your entire business, or in this case, an entire economy, is just immense. And the damage isn't spread evenly. It's concentrated in some of India's most vital, job-creating sectors. We're talking $10 billion in gems and jewelry, another $7 billion in auto parts. These industries employ millions of people. It's the same story for textiles and seafood, which really depend on American consumers. So yeah, this isn't just about trade balances. It's about jobs. It's about people's livelihoods. In fact, one industry report didn't mince words at all. It described the impact simply as catastrophic cost increases. When you start hearing language like that, you know that major disruptions and, very likely, significant job losses are on the horizon. But now for a bit of a twist. Section 3, an unexpected silver lining. Because believe it or not, amidst all the chaos of this trade dispute, something else is happening. There's actually a surprising opportunity that seems to be emerging from the crisis. It's like this crisis is creating two completely different stories at the exact same time. Of course, on one side, you've got the huge risks, job losses, supply chain chaos. But on the other side, these tariffs are actually forcing a major strategic pivot. The pressure is inadvertently creating this powerful reason for India to speed up growth in new areas and maybe break its dependency on a single market. So where is that opportunity? Well, it's in these tariff-free havens. And these aren't just random industries. We're talking about pharmaceuticals, electronics, IT services. These are the higher value, more complex sectors that really do represent the future of India's economy. So in a strange way, the tariffs are kind of creating a fast lane for India's own economic modernization. And all of this brings us to our final section, India's next move. Because the country is now at a critical turning point, with two very, very different paths ahead. The entire situation really now boils down to this one fundamental question. Are these two countries going to find a way to compromise and roll back the tariffs? Or are we watching the beginning of a long, damaging trade conflict? The whole future really hinges on these high-stakes negotiations. Path 1 is resolution. A deal is struck. It probably means India makes a compromise on Russian oil, the tariffs get rolled back, and things cool down. But then there's Path 2, escalation. The talks fail, and this 50% tariff just becomes the new painful reality. And that would fundamentally change the trade relationship for years to come. But here's maybe the most provocative insight to leave you with. While these tariffs are without a doubt disruptive, they might also be a powerful forcing function. They're an unavoidable catalyst that's pushing India to accelerate its economic evolution. It's a crisis, for sure, born from conflict, but it could be the very thing that reshapes India's role in the global economy for decades.